as HUL is concerned, and remember the stock still trades its expensive valuation. It's of course come off materially from the levels it was trading at earlier, but it's still 60 times FY23 earnings, almost 50 times FY24 earnings, and the street was penciling in a lot as far as the premiumization and the rural recovery is concerned as well. Let's get on board Abneesh Roy to pass through the numbers as well. Abneesh, a very inline set of numbers, 5% volume growth, margin at 23.2%, and the commentary as well is talking about how inflation or the worst of inflation seems to be behind us.
Absolutely. So thanks. Overall, good set of numbers given the situation in Q3. So 5% volume growth is a good number. It's exactly in line with our expectation, and it is well ahead of what Nielsen growth rates are suggesting. HUL continues to gain market share in 75% of the portfolio. Also, HUL has seen sequential improvement in EBITDA margin. Our sense is in Q4 there should be even more improvement in margins versus Q2, and definitely worst is behind on margins. Rural demand continues to be a challenge, but HUL is still doing quite well in most parts of the portfolio on a pan-India basis. So, beauty, personal care, double-digit growth, home care, almost 32% revenue growth, double-digit volume growth. So, that has done really well. Foods also has done reasonably steady performance. So, we remain quite positive, and this will be one of our topics for the FMCG space in the coming year.
Just before we talk a bit more about numbers, I want to highlight an important announcement coming in wherein HUL board has approved the new royalty arrangement with Unilever Group. So as a result of that, in the new agreement, the royalty and central services fees will increase from 2.65% that it was there in FY22 to 3.45% of the turnover, and the increase will happen in a staggered manner over the course of next 3 years. Abneesh, how would this impact your estimates? Will this be a material event?
Yeah, so we would need to study that because it's been just announced. But as you said, if I go by the data which you have suggested, we need to look into it. But being over 3 years and maybe just 60, 70 bits increase, I think it's not a major issue, but we'll have to check. But yes, as I said, the margins will improve because commodities have pulled off. So I don't think it's a major concern, but we'll have to see into it.
Feels that the worst of the margins is behind HUL. But let's move on and connecting with another analyst. We have Naveen Kulkarni, who is the Chief Investor.